Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Monday, December the 28th, the year's 2020. Let's talk trading indicators. First, just remember these videos are for educational purposes only, and your results may differ from mine. Indicators. I, I get a lot of questions about indicators. What's the best indicator? What's the best this? Which indicator should I use? Can you make the indicator do this? Can you make it do that? Um, you know, you have to really ask yourself a few other questions first. The question is, what are you trying to do? Or why are you trading? Are you trying to make money? If so, how much? If so, how much? Oh, by when? A certain period? And until you're clear on those basic things, you're just going to be drifting around. So maybe you have a goal. I want to make 10 pips a day, kind of like Walmart. That's his goal. That's his target, 10 pips a day. So then you go, well, how can I make 10 pips a day? Well, there's various ways. You can make 10 1-pip trades, or one 10-pip trade, or 5 2-pip trades, or 2 5-pip trades. There's a lot of different ways. A 3 and a 7, a 4 and a 6. 3 threes and a 1, 5. Yeah, I already said 5 twos. A 1 and a 9. There's a lot of different ways you can make 10 pips. So, how do you go about doing it? And that's where indicators may or may not come in. Usually, my charts pretty much consist of horizontal lines and sometimes some dots or semaphores, what we refer to as the 1, 2, and 3 ball. But how can you make it? Well, here, if you took a trade long back at 33.97, you'd be up 54 pips with a potential of being up, 227? Had you done that? But that's on the monthly. We can come down to the weekly, and you can see here, had you went short at the open, you'd be up 93 pips. Oh, and by the way, for those of you following, all the gaps have filled now. There was, I think, 4 last night that hadn't filled. It was a couple of the CAD pairs, if I remember correctly. And then down here, I think it was dollar franc and dollar yen hadn't filled the gaps. But once again, I mean, you really don't even need to put the horizontal line there. I mean, you know what these prices are ahead of time. Horizontal line is just easy so you can see it on the screen. Doesn't really do anything. I mean, I've got my mid dot indicator from the previous day, and the pivot point puts the dot out there so you know where it is, but does it really do anything? The magnified market price, I guess I should show you what indicators I'm talking about here. We've got the magnified market price that I modified. We've got the chart period, the pair, current price, and then for the week, the close minus the open, the high minus the close, and the close minus the low, so we can know where price is, triangulate it. That's why I call it the GPS. But I mean, that just kind of tells us where price is and where it's come from and how far it's come. But that doesn't really do anything for us. And then we've got the gap fill indicator, but that just tells us where the gaps were. And you could see that on the chart once again. So that doesn't do anything for us. And then we've got the wick zones. Where is price? So here we cross below the wick zone here. If we switch this over to daily, you can see here we crossed below the lower wick zone, broke out. There really wasn't much of a wick zone, but we broke through the daily low, so we crossed below it today. But that's really not any big deal. And we've got the multimeter. We see it, the candle colors on all the different charts, but we could look at the different charts to see that. So this is just kind of helps you. But I mean, that indicator, does it really do anything for you? Is it really going to make you pips? So you see, these indicators really don't do anything to make you pips per se. Now, when we get into, say, the opening range for the week and for the month, for the year, once again, these are just horizontal lines, and it just tells where these levels are. And here, if you had taken the short at 34.41, I believe could have made 10 or 12 pips. And then if you went the other way, you'd be up 16. Remember, I know price likes to launch off the 40, so that number caught my eye, the 40 level here. Just seems to like to launch off of the 40s. But that really doesn't do anything to make us money. So do indicators really do anything to make us money? I mean, see, that's what traders, I think, get tripped up on. They think the indicator is going to make them money. All the indicator is going to do is indicate something. So, for example, we're 212 pips above the yearly open, but knowing that's not going to make you money per se. You know, we're in the inside bar right now. So you can go long at the 68. But does this indicator make you money? No, you can see that this was an inside bar. You can put the cursor, find out what the high is, and just say, well, if it gets there, I'm going to go long. So once again, indicator's not really making you money. It's just making your job of spotting these things a tad bit easier. And we've got the range, but knowing the range, is that going to make you any money? It's just a number. It's how far price has gone between the high and the low. We just know certain things happen, but is it going to make you any money? You know, and this is, you know, for display, knowing where the fib level is that going to make you any money? No, not necessarily. You know, now we get into things. Is it possible to make money? We got the buy zone. Is it possible to make money? Well, do we really need the indicator? No, not really. If you know what the open is, you can calculate plus or minus 8 and 10 from that. So it's just, once again, it's a help. You know that if price has to range, so if it goes, you know, 10 pips, chances are it's going to go 20 or more. And on the other way, if it goes, you know, open minus 8 or 10, chances are it's going to go further. And sometimes it takes a while for it to happen. But that's just how it works, because if you think about it, you see, when you have a buy zone, it's going to be somewhere near a wick zone. It's either going to be at the bottom of the upper wick zone, or it's going to be at the top of the lower wick zone. So if price dips into a wick zone and then rockets out, hey, what do we got there? So you can use this possibly to help you make money, but this in and of itself doesn't really make money. It just tells you where price is in relation to the open, and you just know statistically if it moves, once again, 8 or 10 pips, chances are it's going to move 20 or more. And we do that through the frequency distributions. Just like the pivot point here. See, we hit the pivot right here, and there was a mispivot, which I do believe I called out in last night's video, that we need to probably take out that weekly pivot down there. And you can see here the rat zone. Does the rat zone make you money? It just tells you, well, here's the current daily low, and this is 20 pips above there. We just know if we take a trade in here, chances are price is going to leave the rat zone. But does that really make you money? Now, I keep asking that over. I hope you see something here, that you're getting it. It's not really the indicator that's making you money. The indicator is just making your job of spotting the trade just a little bit easier. Because it's, if price is down here and you wonder where's that 20, you have to get your calculator out or do it in your head. Now, let's just paint the zone, make it easy on the trader, right? So that's all this is doing. Just like up here, just putting these out so it's easy to see. But does it necessarily make you money? And the answer is no, it doesn't. I mean, it's just a aid. Now, let's see. On the pound here, here's that weekly pivot that I pointed out last night. You can see we hit it. So any of those taking those trades, you were rewarded handsomely. Now, does this happen all the time? No, it doesn't happen all the time. But as I had mentioned yesterday, we've only missed a couple of weekly pivots this year, and you had to go all the way back to 2018 where you only missed a couple. Then you had to go all the way back to 2014. So the point is, these pivots are rarely missed. Sometimes it might take a week or two to take them out, like here. This one took the following week to take it out. But even if you traded in that direction and you had a stop loss in place, at worst, you would have hit your stop. But if you were smart, since it barely missed, you would have made some pips, put some pips in your pocket. Because once again, if you had a goal of 10 pips, and you can see there the open was 54, 33.54, and the low was 32.79. So 21 and 54 is 75. Yeah, you could have made your 10 pips off of that trade. So what really is making pips when you think about it? And you can see here in and out of the wick zone. So out of all these charts, and we got these simple, the Walmart chart, what is making pips? Does having this up here make you pips? No, you make you pips. It's like I say at the end, it's not what you trade, it's how you trade it. So as you all know, when you place a trade, you have to have your stop loss in place because you don't want to lose any more than you're willing to risk per trade. That's what keeps you in the game, okay? But what makes you money? That's the big one, right? It's taking your profit before the market takes it back, okay? Because you could be up. Like right here, you could have been up. I think right here, coming out of the 40, it came up to a 60. And I think it was up 20 pips. And then it slammed all the way back down. So if you didn't take that money before the market took it back, you missed out. And here's another one. It came down here. There's about 5 or 6 pips possible. If you didn't take that money back, take it. Market took it back. So you make the money, not the indicators. The indicators are just there to indicate. And what you want to have indicated, that's up to you. But you really need to know how much you want to make on a daily basis, hit it and quit, and don't be an addict like some people we know. I got you there, Walmart. Anyway, fellow traders, when you look at these indicators out there, just don't go for the flash. Don't get suckered in because it's not what you trade. It's how you trade it. So go out there and drain the banks. This is TheRumpledOne, over and out.